We want to bring in Gina Martin-Adams of Bloomberg Intelligence. She is Chief Equity Strategist. So, Gina, earlier we were saying that it seemed like there wasn't a panic. It was fairly orderly. Yeah. That might have changed in the last 16 minutes or so as the Dow fell more than 1,000 points. We've come back up off those lows a little bit here. What is likely to be happening in the final hour of trading? Is it computers kind of feeding on each other? Are the algorithms driving a lot of it?
Yeah, I think a lot of this is we broke through some key support levels on the index. We broke through that 50-day moving average, which we talked about just a couple of hours ago. And that seems to have created this pretty big capitulation in the equity market. You know, it's been a while since we traded beneath our 50-day moving average, so there's just not a lot of support beneath that 50-day until you get to the 100-day moving average. So that would be my next target for the corrective process. You know, it's never easy to identify where the selling is coming from, but this does seem to be pretty broad-based. As we identified earlier, it's about earnings. This is about earnings, and it has been about earnings for the entire last week, and investors are looking at the earnings stream and they're saying, okay, maybe tax reform is not entirely 100% a great story for all companies. And starting to really dissect that. That created a little bit of a sell-off, and that's got investors spooked. I mean, just like investors were putting a lot of money into ETF funds on the upside, they're now taking them out. And we'll find some support levels here, hopefully at the 100-day.
All right, I just want to show everyone the charts that you're referring to, the support levels here. This is the S&P 500 on the Bloomberg, and of course the white line is the S&P 500. There is a decline over the last couple of days. That purple line is that 50-day moving average, Gina. The green line is the 100-day moving average. The yellow line is the 200-day moving average at 25.34. We've broken through that 50-day moving average, that short-term trend line, in today's session, mainly in the last couple minutes.
Right, and that had proven to be really critical support level for the index for most of the last year. So the fact that we broke through it probably has investors spooked. Now, we'll see if we can capture back a little bit of the losses to trade right around the 50-day, right? This is still intermarket trading. So you can see the market bounce back to the 50-day, and it would still reflect an environment where the market is trying to find support at its 50-day moving average. So that's why I watch that 50-day pretty carefully, because it's proven to be really, really strong support for the market over the past year.
And just in terms of the individual sector performance, this to me looks more normal than the trading that we got last week, where you've got the cyclicals under most pressure here and the defensives actually losing least. Yeah,
this is a broader sell-off of just a risk-off scenario, where last week it started off as very earnings specific. Again, energy stocks leading the declines because earnings were extremely weak. Healthcare leading declines because the earnings outlook weakened materially when we got the news that Amazon was potentially entering the healthcare market. Now it's cyclicals underperforming defensives, a bit of rotation into utilities earlier today. Utilities still outperforming the broad market, but this is more of just broad-based sell everything and take a minute and wait and see where it lands and potentially buy it back later.